Hello there, and welcome to my channel. I'm Daryl Tan. For this video, we're going to talk about financing, especially when it comes to cars. Now, doing a car, some people they will have enough cash, they will just buy for that. So I'm not going to talk about cash buyers. We're typically talking about loans, right? A typical car, you will actually need some form of loan. You can go up to 90% margin, where you can go either to financial institution like banks, okay, because banks are pretty much very competitive nowadays, or some brands like BMW, they have their own in-house financing. Okay, so which one is best? Now it really depends, but the purpose of this video is more towards on explaining what is the in-house financing for BMW, which is BMW Credit, all about. Okay, so I'm going to share this slide. So let me just focus on that, check on that. Okay, share the slide. At least you have a better idea. Okay, so this is an example of what's all about. Now, you want to go to this page, it's easy. You just go to bmwfs.my. Okay, so or maybe you could type BMW Engage. Okay, so basically it's a pre-approval what they call website. Okay, so for some people who wanted to make sure the loan really approves and so on, this is one easy way. Okay, so I'm just going to take this as an example. I'm going to take an example of the free series. Okay, let's say I take a 330i. Okay, so as you can see right here, there's actually three products. Okay, the bank normally, here's how it works. The bank will give you a rate. Okay, example maybe 2.3%. So what you do is that you literally just pay throughout the years the same amount. Pretty straightforward. For BMW credits, it's very similar, except number one, in fact, there's only one main difference. Other than the rate is different, the years is different. Because for BMW credits, they have up to 7 years, whereas a typical bank would be until 9 years. Okay, so how do you really know which is best? Now, if you want to use this website, all you need to do is just key in, not really key in, but you just add in 4 years, 5 years, 6 years, 7 years. Okay, maximum 7 years with 10% down payment, and you have an estimation of how much you'll be paying. Now, you based on this amount, you get to see that this car you get to pay 3,734 ringgit until the end would be 3,006. So it's pretty much similar. Hmm? But of course, for some people, we may have different needs when it comes to payment plans. Okay, so that's where this comes in. Now, the second one is called the balloon. Okay, so how does the balloon really works? First of all, balloon financing, we call it balloon, is designed so that every month you have a lower amount to pay. Okay, so maximum you can go up to 5 years, so it's between 3 to 5 years. Okay, so okay, assuming for the same amount, okay, 10% down payment, 5 years, you pay 4,971. In comparison with straight line, which is sorry, this is straight line. In comparison with balloon, is only paying 3,007. If you still remember just now, the straight line for 7 years is about the same. Okay, but there's a little difference. At the end of the tenure, which is on the 60th month, or end of 5 years, you still have a balance of 101,047 ringgit 60 cents. Okay, so this is like the balance of the loan. Now, what it does is that you have a few options, whether you can just pay off one shot, because we believe that some of us, as we grow after 5 years, our career grow, our income becomes more stable, and we are able to pay up that lump sum. So this one way, okay? So you just pay off this 101,000, you own the car. Two, you can actually extend another year, okay? Just one more year for this amount to own the car. Or three, well, maybe you felt that, hey, I decided to change the car again. Maybe after 5 years, a lot of new stuff have happened. I want a new car. Okay, yeah. So what you do is they just sell like this car for BMW financial credit. And what happens is that they were actually based on the market rate. Based on market rate, and they will just contrast off whatever balance and just fork up the balance. If the market is good, of course, it's great. If the market is pretty average, well, You just need to pay off the balance of that. Mhm. Now, what if, just what if, people say that I want if some form of guarantee, a future guaranteed future value. So that's where this comes in. Easy drive. Easy drive, it only can help. I mean, it can be applied either 3 or 4 years. On a balloon, you can go up to 5 years. And there's one more condition is that there's an annual mileage and estimation of about 20K. Now, if you're staying in Malaysia, a typical car, as long as you're around KL, Kuala Lumpur, your typical car mileage is about 20,000 kilometers per year. Of course, for some of us, we used to travel outstation, then 25,000 kilometers would be possible. Okay, so I'm just taking 20,000 as an example. 4 years, 4,001. Compared to balloon, it is like about 300 ringgit difference. Okay, so in exchange of that amount, yes, you get a slightly higher guarantee value, but slightly higher balance. This is a loan balance, by the way. Slightly higher balance, and what you see is that when you trade in or when you sell the car, we will value at this 121,000. In other words, when you sell, it's just like leasing. You after you use for 4 years, you sell the car back, then you don't have to pay a single cent. And let's assume you get plan to actually get another car. That's a different story. But one thing for sure, you won't have to worry about end of the day you have to pay fork out extra for the balance. Okay, so these are the three products when it comes to the BMW financial services. I hope this video can give you a better idea when it comes to in-house financing. Check out for my next video when it comes to whether should you go for a bank loan, which is a conventional loan, or should you go for the in-house loan. All right, so I'll see you next time.